Hello everyone, welcome to our Egyptian online seminar group. First, keep your microphones off, then if you have any questions, you can ask our speaker after his presentation. I have great pleasure of welcoming Professor David Gilchrist. David Gilchrist is a chartered accountant and an economic historian. He is currently professor of accounting at the University of Western Australia and is founding convenor of the non-for-profits UWA Research Network. He has taught at the London School of Economics and Portsmouth University in the UK and at several Australian universities. David is also a member of the Asian Social Society Research Network and Australian Accounting Standards Board Academic Diversity Panel. Broadly, his work is focused on human service, sustainability, efficiency, financial reporting, and policy frameworks. Now we will start our seminar with dear Professor David.
Thank you very much, Mohamed, for the opportunity to speak, but also a big thank you too for taking the initiative to pull together this seminar series. As I said beforehand, I think it's a really important initiative, and I think you said 200 seminars up to this point in time is a fantastic achievement. Well done. Thank you also, everyone, for coming along today to have the opportunity for me to speak to a paper that is really very much focused on Australian accounting standards and the not-for-profit sector in that country. And I respect that this would be very different probably from a lot of areas that are studied by many in the audience. And so I would be delighted to take questions at the end, and I'll speak for about 40 minutes with the intention of going through what I think might be the most important aspects of this research, and then to have the opportunity to take as many questions as people might have. To that extent, this paper is entitled, as you can see, Decision Usefulness, a re-examination of the information needs of non-profit general purpose financial report users. And I'll explain that a little bit more, but it is a part of a major research program that we have underway in this country, which is called the Australian Non-Profit Accounting Standards Research Program. I lead the program, and UWA, University of Western Australia, is the key administrative unit of the program, but we have collaborated with the Institute of Community Directors in this country, Western Sydney University, Queensland University of Technology, and also the University of Newcastle. So it's a fairly much a national program. I'd also like to, at this point, acknowledge my co-authors, Doctors Craig Fernio, Andrew West, and Yu Zhang. All three come from Queensland University of Technology, so they're on the other side of the country from where I am in Perth in Western Australia. In this presentation, I want to have a look at a little bit of context around the not-for-profit and charitable sector to give those people in the audience an opportunity to perhaps come to grips with and understand what the sector is made up of here in Australia and what it might look like, and probably more importantly, to get a sense of why accounting standards are so important to that sector. I'll have a look at the research methodology itself and what we did for this particular paper. I will go through our major findings in terms of the research questions that we put, and also make some concluding comments. And as I say, at the end of the day, I'd be delighted to get any questions or comments that you might have. Additionally, I know Mohamed is recording this, and so please get a copy of the recording if you'd like it. At the end of my slide deck, there are my contact details, so I'd be more than happy to get an email from you as well if you think that that would be useful. Okay, so in terms of context, first and foremost, non-profits in Australia. In Australia, we tend to talk in terms of the economy of having three sectors, as I think we do in many parts of the world. And those sectors, of course, are commerce, the government, and the non-profit sector. In this country, we tend to term that the third sector. It's made up of essentially 600,000 non-profit organisations, of which about 56,000 are actually registered charities. So in Australia, non-profit organisations are self-selecting. Anyone can set up a non-profit, and there really is very minimal tax or other regulatory requirements that are associated with those non-profits. On the other hand, if you want to be a charity, that is that you can collect money from donations, bequests, or have the most significant tax benefits as a result of being non-profit, then you have to be a registered charity, and a registered charity is regulated by the Australian Charities and not Non-for-Profits Commission. And so in this country, as I say, there's about 56,000 charities that are registered with the Australian Charities and Not-for-Profits Commission as a subgroup of that 600,000 non-profits. I guess the other thing to be aware of is that non-profits and charities can be incorporated in many different ways. They can also be unincorporated associations. And I'd be delighted to talk more about that if that's something that people would find useful to understand a bit more of. On the other hand, the Australian accounting standards are based on the international accounting standards, so the IFRS or International Financial Reporting Standards base. But in Australia, we have taken those IASs and we've changed them or modified them using what we call Aus paragraphs. So in other words, we've taken the IAS accounting standards as the base standards, and then we've added paragraphs that we think are important for the Australian context and Australian conditions. Many of those paragraphs actually relate to non-profits in this country. And at the end of the day, by and large, those Aus paragraphs have a tendency to reduce the number of options available to those people preparing financial reports. To that end, we also have a unique arrangement in terms of accounting standards in this country compared to certainly most other Anglophile countries, and that is that we have transaction neutral accounting standards. Our accounting standards, the same set of accounting standards apply to government, to not-for-profit organisations and to commerce. And transaction neutrality applies where we say, well, regardless of the type of organisation conducting the transaction, we should account for it in exactly the same way. I guess this transaction neutrality or transaction neutral policy framework is really the crux of a major problem that we have in terms of accounting standards of not-for-profit organisations, and what drove us to look at this project, or rather establish this project and look at this topic much more deeply. The requirement for meeting the Australian accounting standards also varies across different types of incorporated body. So different regulators make accounting standards mandatory or not. And in the case of Australian charities, certain charities do have to provide accounts using Australian accounting standards and others don't. So it depends on typically on the size of the charity or the not-for-profit organisation by turnover. And as I say, in charities, we apply the accounting standards according to the turnover of that organisation, its income. I can again talk to that a little bit more fully if people would like me to in question time. What are the key issues? Well, the first key issue is that in Australia, we also have a relatively unique thing where not-for-profit organisations, both public sector and private sector, are able to prepare currently what we call either general purpose financial reports or special purpose financial reports. General purpose financial reports are those reports that are prepared fully in accordance with the Australian accounting standards. Special purpose financial reports don't say that they are prepared in accordance with Australian accounting standards, but they do have a fair complexity to them. In other words, special purpose financial reports are anything that is not adhering to the Australian accounting standards, but there is a strong history of using that type of reporting in the not-for-profit sector. I'll speak to that a little bit more as we go through the presentation. The other key issue that is often brought up in relation to charities and not-for-profit organisations is the cost versus benefit rationale or calculus. That is, whether or not the cost of adhering to Australian accounting standards for charities and not-for-profits is outweighing the benefit that comes to those organisations as a result of preparing those accounts. And so this is a big issue for charities and not-for-profits because about half of their income comes from government, the other half comes from donations from philanthropists and others. And so cost becomes a really important issue when those resources could be applied elsewhere. The other element that's extremely important is when we think about Australian accounting standards, those standards are developed in order to take what we call a decision usefulness perspective. That is, that those people that might create Australian Accounting Standards prepared reports, that is, reports that comply with those standards, undertake the creation of those standards in the context of making sure those reports are more decision useful as a result. And so this is a big issue as well, because we don't really understand, number one, who uses those financial reports for charities and not-for-profit organisations, and number two, what kind of decisions they might make when they use those reports. The government non-profit nexus is also a really important issue. This is where government provides a lot of money to charity organisations in Australia to provide services, and accountability in relation to those services is challengeable because we're not quite sure whether the government should be accountable for them or charities should be accountable for them. And finally, as I mentioned before, we don't really know who those users are for these reports or what decisions they actually take at the end of the day. Finally, one of the key things that is also being asked across the sector in Australia is how is financial information being provided to be able to be accessed by users? And I'll talk to that a little bit more as we go through this particular presentation. So what did we do in order to come up with our evidence? We undertook a qualitative research piece where we held 7 round tables, and those round tables were divided up into 4 users, 4 round tables consisting of users, 4 round tables consisting of preparers, so people who actually create the accounts, and 1 round table consisting of auditors who have a specialty in auditing not-for-profit charitable organisations in this country. We had a semi-structured interview guide where we started off with interview questions that were focused on what was top of mind to try and extract from people what they were concerned about in relation to financial reporting. And then gradually, as we went through the interview process, we had effectively binary questions where people were asked specific questions where they could reply yes or no. Notably, we didn't mix users, preparers and auditors around one table. We wanted to find out what each discrete group thought about financial reporting and charities and not-for-profits. All up, we had 41 participants, as you can see there. Users were 12 participants, preparers 13, and auditors 5. The roundtable itself consisted of at least 1 researcher, but normally 2 or 3 researchers. We recorded it, and then we subsequently transcribed it so that we had that evidence transcribed and we could evaluate what was said. It went for 90 minutes, and as I say, the guided discussion took us from top of mind questions to specific and often binary questions as we went through the process. Okay. The other key interesting thing or important thing here is, of course, the research questions itself. And we had 4 research questions that we were keen to pursue in this particular methodology. The first one is who is accountable? In other words, who is the reporting entity, or who are the people that are actually accountable for the operations of the charity and the not-for-profit? Research question 2 focused on to whom are non-profits accountable? In other words, who are the users of those financial reports? And more importantly, perhaps, what information do those users need? In other words, what information is considered decision useful from those users' perspective? And then finally, research question 4 related to the question about how the information is actually provided. And as I say, I'll talk to that a little bit more as we get down the presentation. But the provision of information is a really important aspect because, of course, those users who want to make decisions related to charities and not-for-profit organisations have to do so in the context of the information provided. Okay, so who is accountable and who is the reporting entity? So what kinds of things did we identify in our roundtables? What kinds of things did people have to say? I think one of the positive things was that, first and foremost, multiple stakeholder accountability was not contested. In other words, the charities and not-for-profits in Australia, this group felt that there were a number of people and organisations that should be accountable or held accountable for what those charities and not-for-profit organisations do. What was contested, though, was how that accountability takes shape and who actually provides that accountability. And this is contested for reasons that I said before in relation to, say, the not-for-profit government nexus. The government provides money, the not-for-profit provides the services. Who is responsible for that? But also, at the end of the day, whether or not the board, the CEO, philanthropists or others might take a role in that accountability process itself. The third thing that came out generally across all groups was that the tax status protection was a high priority for these organisations. So in the Australian context, a not-for-profit or a charitable organisation does not have to pay any tax. And if you're a charitable organisation, you can gain access to some fairly significant tax benefits for your employees and also for philanthropists providing resources to you. And so one thing that people were agreed on was that accountability is absolutely critical in order to protect the tax status of these organisations. Indeed, one participant mentioned that from their perspective, this was a minimum entry-level cost for the organisation. And then in relation to the government non-profit nexus, who is responsible or accountable to whom for what, was a big issue that was continually discussed also in this group. And I must say, the groups didn't really come up with an answer that was satisfactory to allow us to actually arrive at a result in relation to that particular question. So who is accountable and who is the reporting entity? Well, a number of things also came up in the roundtables that identified a number of challenges that prevent effective accountability and effective reporting by these organisations. And these came through in the other RQs as well. So they're fairly important issues that are really affecting the quality of financial reporting in these organisations and also the effectiveness of that financial reporting. So as you can see there, first and foremost, and I think this is one of the most impactful elements that is preventing quality financial reporting in charities and not-for-profits in Australia, is a lack of financial literacy, both in terms of those charged with governance, so the directors or committee members of these organisations, and also CFOs, but also extending to chief financial officers and preparers within those organisations as a result of largely the lack of financial investment in the organisations for training and capacity building, but also because those positions are relatively underpaid compared to commerce or government. The other lacking that was identified by all groups was that there's a lack of governance experience in these people as well. So not just around the financial literacy itself, but also around being accountable and maintaining that accountability. The third element, as you can see there, is the impact of volunteer directors. Charities and not-for-profit organisations in this country are largely governed by volunteer directors, people that come from different walks of life that actually have often little industry knowledge in relation to what that charity does and where it does it. There was also a key issue where retired volunteer directors were identified. People who had retired from full-time employment were now spending their time volunteering for charities and not-for-profits to help them govern, but identifying that they weren't up to date because they weren't connected with opportunities for professional development or ongoing learning. A lack of administrative resources also was recognised as a challenge. These organisations are very poorly funded and don't have the money to be able to apply to administrative processes. All of these organisations saw regulatory compliance as a priority. That is, accountability to a broad network wasn't as important as being compliant with the regulatory requirements. And I guess that and acquittal to specific funders, that is, those funders that provided resources required specific financial reports, meant that these organisations might often engage in what we call tick box governance. That is, they prepare the reports, they present the reports, submit everything to government that has to be submitted to government, but perhaps don't take a lot of time to examine the content of those reports or understand what they actually mean. Indeed, as you can see here, one of the participants was fairly honest and said, well, we're on autopilot, to be honest. We sort of rinse and repeat from last year, you know, from every previous year. In other words, this person was saying we go through the same processes to make sure we meet the regulatory requirements, but we're not really understanding or concerned about whether or not those requirements or those reports mean anything to our organisation or to our organisation's stakeholders. RQ2 then, to whom are non-profits accountable? Well, this issue of users is a very big issue in not-for-profit organisations. In commerce, it's fairly obvious who the users are, particularly starting with shareholders of listed organisations and unlisted organisations. In the context of not-for-profits and charities in this country, Often those organisations don't even have members, so the boards of directors are actually accountable to themselves in a sense, which of course is a great weakness in terms of being accountable as a corporate organisation. What the roundtables did reinforce, though, that the traditional users, the organisations and people that we traditionally identify as users, were reinforced or identified. In this case, the Australian Charities and Not-for-Profits Commission, the Australian Security and Investments Commission, and also the Australian Tax Office were all identified as users. These are all organisations within the Commonwealth Government, the national government, that have a role in regulating charities and not-for-profit organisations. They also identified the second lot of what we call traditional users, who are funders and people who are in government who require acquittals. In other words, these organisations have to provide specific financial reports to philanthropists and government agencies that provide them money to do certain things. And then the third element that came out that has always been identified as members and employees as being potential users of not-for-profit and charity financial reports. But COVID certainly made a big difference in relation to the numbers of members and employees that were reported by preparers of financial reports who wanted to get financial reports in order to understand whether or not their employment situation was sustainable, and members who wanted to appreciate the sustainability or solvency of their membership organisation. In other words, COVID made a reality or crystallised the identification of these users in the minds of preparers. The other thing that is important there then in terms of those users is the higher order findings that we identified as a result of who these users might be. And a couple of key issues came out of that I think are important. The first one is preparers themselves identified themselves as users of financial reports. Now that might sound strange, but in fact what they were saying was they use the published financial reports of charities and not-for-profits in order to compare their organisation with their peers, compare their performance financially and compare their efficiency financially compared to their peer organisations. The other thing that was quite interesting was that boards and committees, so those people charged with the governance of charities and not-for-profit organisations, also were identified as users. Now, in a commercial sense in Australia, this would be very unusual because directors actually write the report, or rather are responsible for the financial report of their company. It's the same in not-for-profits and charities generally, where those directors are responsible for that report. However, in practice, those directors are recipients of that report from the CEO and CFO and are considered to be users by the CFO and CFO preparers of financial reports, rather than taking the responsibility for those reports that everyone expects them to be taking. The third group that was quite interesting in terms of users and illuminating from the point of view of setting non-profit accounting standards in this country was the observation by a number of report preparers that government agencies and philanthropists actually are seeking more iterative information points throughout the year, rather than seeking just one financial report at the end of the financial year. And so in this report, we've been able, or in this piece of research, we've been able to identify that in fact government agencies and philanthropists want more than one financial report a year, and they also want to have more operating information rather than just financial information. Pardon me. Finally, members were also identified for the reasons I said before in relation to COVID, but some key challenges were discussed by both preparers and also auditors in relation to the status of membership of not-for-profit organisations. Like companies, members have a very important constitutional and governance commitment to organisations. They're there not only to enjoy the benefits of being members of a not-for-profit or charity, but also to be able to challenge the board and to make sure that the board's doing everything it needs to do from a governance perspective. In this case, it was identified by preparers and also by auditors that in fact there were organisations where members were non-existent. The only members were actually board members themselves, and that there is a very strong constitutional weakness here where those general purpose financial reports or those compliant financial reports with accounting standards are not really getting to an audience that can do much with them. And so the opportunity for governance arriving out of that process is relatively small. The other higher order findings that we identified was that the Australian Charities and Not-for-Profits Commission, which publishes financial information relating to charities in Australia, was also regarded by auditors and by preparers as being a very high quality source of data and comparatives. The ACNC, or the Australian Charities and Not-for-Profits Commission, requires charities that are registered to provide what we call annual information through an annual information statement at the end of the financial year. And this data is available in aggregate and also individually, so that we can see what the whole sector is doing, or parts of the sector, as well as individual organisations. And the data is typically accompanied by the financial report and annual reports of those charities too. So the one driver for sound financial accounting standards for the charities and not-for-profit sector is to bolster this ACNC information data and to be able to make that more decision useful from the point of view of philanthropists and others that might be selecting charities to provide resources to. The other thing that was important was, as I indicated before, is that employees and creditors, as a result of COVID, were reported by preparers particularly as increasingly asking for financial reports for their organisations, to assumably to ensure that their organisation was continuing to be solvent, their job in the case of employees was going to be safe, but also in the case of creditors, that their job, that the amounts owing to them were going to be paid, and that the creditors could continue to sell on credit to these organisations. Okay, so what about RQ3? What information is actually needed? Pardon me. This was actually the most substantial area for a number of reasons, which I think will become obvious in a minute. But the identification of users and the needs of those users is absolutely critical in the context of identifying decision usefulness and the weaknesses related to decision usefulness, but more importantly, perhaps to also inform how Australian accounting standards might be modified in future for not-for-profit charitable organisations. I guess one of the most telling elements too, or telling phrases that came out of the roundtables, was when one participant said, in relation to the question around mission versus bookkeeping, having good books doesn't mean we do a good job. And I think this was an element or a great indicator of a sentiment that came out across all groups, and that is that groups are really keen to ensure that there's adequate financial reporting for charities and not-for-profits, but more importantly, they're worried about those charities and not-for-profit organisations doing the things that they're supposed to do. That is, providing aged care services, providing disability support services, or otherwise supporting those people in the Australian community that warrant that support. The other thing that came out of this process was an identification of the issue of profits and cash reserves. When a charity or a not-for-profit organisation makes a profit, this is a real problem for those organisations, because those people who provide funds to charities and government agencies might think that those organisations don't need to have funding in future. And so profits and cash reserves can be misunderstood by those organisations, those users that provide financial resources to charities. Pardon me. And so profits and cash reserves, there might be an incentive, for instance, for earnings management. In another piece of work that we've done looking at earnings management in disability services, not-for-profit organisations in Australia, we found that earnings management exists, and it exists to drive the net income down to either a break-even point or even a small loss for these organisations, in order to advertise to philanthropists and governments that the charity needs financial resources. The other problem that these organisations identified was, these participants rather identified, was the issue of overhead allocations. When you are acquitting to programs to specific funders, you need to be able to allocate a proportion of your overheads to those programs. But there is no set way to do that, agreed way to do that. and that presents some significant reporting problems for preparers and also for users in the context of that actual process. Fundraising costs also raises an issue. How you define fundraising costs and how you allocate them was identified as a problem from a user's perspective. Performance information versus financial information was also identified, and I mentioned that quote in the first part of this slide, where mission versus bookkeeping was a big issue. Probably, though, the most significant issue for users, for preparers, and also for auditors in relation to what information do users need was the issue of comparability. One of the key things that came out of discussions in roundtables was that current Australian accounting standards provide too many options for not-for-profits and charities, and therefore those not-for-profits and charities are far less comparable than they might otherwise be. A lot of people in these roundtables were very keen to see the options reduced in order that comparability was more effective between organisations. Some more substantial issues also came out of these discussions in relation to decision usefulness and financial reporting using the Australian accounting standards. Firstly, this issue wasn't raised as top of mind by participants, but once it was introduced to them, they could see that there was an issue, and that relates to controlled versus administered assets. In the Australian context, philanthropists and governments often provide either cash or they provide assets to charities in order for those charities to be able to run their organisations. Sometimes that provision comes with certain restrictions on the ability of those charities to sell those assets. In that case, we would call the assets administered assets rather than controlled assets. Controlled assets are those assets that charities and not-for-profits can simply realise, do as they will with. What does that mean at the end of the day? It means that in terms of controlled assets and administered assets, while both of those types of assets meet the definition of assets under the Australian accounting standards, there is actually an opportunity for users to be misled if a balance sheet has a preponderance of administered assets over liabilities. It would appear that the balance sheet might be solvent. It would appear that the balance sheet might be sustainable into the future, but in fact, restrictions on the realisation of those assets would mean that the balance sheet is perhaps in worse state than it might otherwise appear, thus misleading those people who are using that balance sheet to make financial allocative decisions. Similarly, cash, reserves and restricted funds. So reserves are cash that are set aside by an organisation for what the purpose that they feel that they want to apply them. But restricted funds apply where a philanthropist or government has given money to an organisation for a particular purpose, and that money can't be used for anything else. There was a clear opportunity in the Australian accounting standards to differentiate between controlled and administered assets and reserves and restricted funds, so that people using balance sheets can see what real assets and liabilities are extant and what reserves can be applied to those assets and to those liabilities rather when they're realised. Capital income was also something of a big issue for preparers and for those charged with governance in relation to charities. Why? Because capital grants in Australia are brought into the profit and losses income. But of course, when those capital grants are spent on the particular capital item that they're provided for, then that adjusts the balance sheet. There's an adjustment in the balance sheet rather than in the income statement. And so profit can be distorted in the case of capital grants. In the case of bequests, there's a real need for the Australian accounting standards to recognise when bequests are able to be recorded as income. This is a real tricky issue for people because at the end of the day, a bequest in Australia can be challenged right up to the point where it's actually paid. So even though someone might include your charity in their will, they might die and it might be right for that money to be paid over. Family and other people can challenge that will and overturn it, in which case the bequest really shouldn't be accounted for until it's actually received. And then finally, COVID again struck where traditionally in the Australian context, we don't report sick leave or personal leave. However, there's been a progressive change in the Australian context where sick leave and personal leave have been accumulated so that over time people are able to build up sick leave and personal leave as part of their continuity with employment. We don't report on these elements, but COVID identified that, in fact, significant amounts of sick leave and personal leave were taken during that period, and there was a significant cost to organisations that they had not accounted for and they had not included on the balance sheet, for instance. So this is a real issue, but it's also probably a timely reminder for organisations that sick leave and personal leave also become more important as the demographics of the employed population in Australia age as well. So we're going through an ageing process at the moment where our workforce is gradually getting older. As they get older, of course, sick leave and personal leave become more and more important to them. So RQ4, the final research question, and I've got a few minutes left to be able to go over this. First and foremost, we found in those people that participated, about 53% of those charities and not-for-profit organisations prepare accounting standard compliant financial reports. 35% prepare uncompliant reports, and interestingly, about 12% were unsure about what the status of their compliance was. What do they publish? They publish summaries only at the moment. So they put on their websites and in other areas things like pie charts and graphs and very minimal information relating to their organisation's finances. They do provide audited financial reports to those people who ask, but they don't publish those financial reports. And some sort AASB sanctioned administrative overhead formula and marketing cost formula to support how that information might be provided. In other words, they thought that the Australian Accounting Standards Board could go beyond providing standards for the actual creation, the preparation and presentation of financial reports, and actually sanction overhead formula and marketing cost formula in order to report in a way that is comparable across charities, not just within a charity. Okay, so I've been through a lot, I understand, and particularly for an audience that may not be aware of how things operate in this country, and fair enough. And so I guess I just want to top off with some, or finish off with some concluding remarks about the key issues that, as we see them as a result of this report. And then, as I say, take some questions, as many questions as people might want to have dealt with, and I'm very happy to stick around to deal with those. But in terms of concluding remarks, I think the study identified a few things that were really important for us in the Australian context. The first thing that they identified was that everyone was very positive toward accounting standards themselves and general purpose financial reports. In other words, everyone felt that accounting standards were important. And that arriving at a set of accounting standards that was appropriate and proportionate to charities and not-for-profits in Australia was a really critical thing. I saw that as very positive. They were, though, very keen to see simplification. And I guess going right back to one of the original slides, one of the first slides, you recall that a major problem identified was the financial literacy of those charged with governance, directors, CEOs, chief financial officers, and so on, in relation to charities and not-for-profits in Australia. People felt that the more simplified you made those financial reports, the more effective that reporting process might be, and the more engaged people might be in it. Now, I correlated with that, or connected to that, there's also, out of those discussions identified by the research team, an opportunity, we think, for a long-run strategy of trading technical correctness for simplification in the short term, and then building on technical correctness over time. In other words, let's make the financial reporting requirements for charities and not-for-profits in Australia as simple as possible in the short term, and over time build capacity to understand in order to, over time, tighten up on the technical correctness that is inherent in those standards itself. It won't be a surprise to people listening to this presentation that ultimately education is absolutely critical to seeing the accounting standards effectively developed, but also implemented in charities and not-for-profit organisations. So we see a long-term educational plan for charities and not-for-profits as being absolutely critical to the development of accounting standards, but also to their implementation, which at the end of the day, let's face it, if you're implementing effectively, then that's the real issue for accounting standards. Okay, we do have some continuing research. So as I said, this is the Australian Non-Profit Accounting Standards Research Program. Currently, we're undertaking earnings management research into disability service providers. As I mentioned before, we do have a user identification in charities reporting project underway, evaluation in charities reporting underway, and also audit non-for-profits research underway. So we've got quite a number of elements that we're keen to continue to pursue through this research program. And I guess, to be honest, we would love to engage with not only people within Australia, but also more broadly, that might have an interest in not-for-profit charitable reporting, and also might have experience and examples of things that might have worked elsewhere that we can apply in Australia, or equally where we might have some things that might be useful for those people outside of the country. So delighted to make contact in that regard. And as you can see there, my website, rather my email address and website are there for your information if you think that would be useful. Mohamed, thank you very much. I hope that made sense, and I'd be delighted to take any questions that you might have.
Thank you very much, dear Professor David, for this contribution and your effort. It's really an excellent presentation. Thank you very much. Now, if anyone have any questions, you can open your mic and ask your question. Sufyan, Dr. Sufyan, you have any question? There is some questions there, dear Professor David. One ask how we can measure the quality of financial reporting in the non-for-profit organization.
That's a really good question, and that's something that we've been tackling, and in fact, something that we think will probably research specifically in time to come. But quality relates, of course, to preparation and presentation of that financial report. I guess what we're arguing, Mohamed, is that in relation to reporting quality, we want to come backwards from the user and what the user wants to inform quality, rather than what often happens in this country, and it may happen similarly around the world, is that accountants get together and decide what needs to be reported and decides what quality is, not the users. So we're trying to come from the user perspective forward rather than from the accountants or preparers perspective backwards. I guess the other thing about reporting quality is it's a little bit like audit quality. It's very hard to recognize, but we do recognize poor quality when things don't go very well. And I think one of the things that is important from that perspective is that we continue to pull together case studies of charities and not-for-profit organisations that don't perform well, that collapse and ultimately perhaps even terminate, because those experiences also inform our understanding of quality, of course.
Thank you. Another questions. The related questions: what are the challenges facing the auditor when they auditing the non-for-profit organization?
That's a really good question, a great question. It perhaps comes from an auditor in the audience. So there's probably three fundamental challenges to auditors in this country, aside from auditing generally. So auditing generally is a challenge in Australia because we simply don't have enough auditors, and therefore there are very strict timelines for audit reports to be lodged with government, and if they're not lodged, then there's strict penalties. So that is the context, if you like, in which not-for-profit auditors operate. The other three elements, though, that I think are probably very important for those auditors is, number one, valuation can be very difficult in a not-for-profit environment because assets have different uses, but also there can be different types of assets, of course, that might not have a regular market against which you can mark a value. And so organisations, in the case of Australia, churches, mosques, temples, all of those kinds of buildings that have very high social value are very difficult to value in often because they're old, they're historic, they are very often irreplaceable, as we all know. And so that becomes an issue for auditors to be able to understand the balance sheet and appreciate the extent to which valuation is appropriate and correct. The second thing that is difficult for auditors is the going concern question, which of course is critical in applying accounting standards, which are the criteria against which audits evaluate financial reports. And going concern is difficult in Australia because very many not-for-profit and charitable organisations are funded by governments, as I said before. Very often government won't confirm funding or rollover funding other than for a 12-month period. So in terms of going concern, it's very difficult for an auditor to be able to sign off because a not-for-profit or charity might be reliant on government funding, and that funding might only be in place for 12 months, and it might be rolled over every 12 months. So that's a very difficult question for them. The third question that I think is very important and difficult for auditors of not-for-profits and charities to manage is that question around financial literacy for directors and committee members. And auditors should, of course, report to the board of a charity or a not-for-profit, but often because the board doesn't understand the audit process or have the sufficient financial literacy, they might delegate that to a subcommittee of the board. I've even seen charities and not-for-profits in Australia delegate the audit process to the Chief Financial Officer and CEO, which is quite ridiculous when you think about it, but it just shows up the lack of financial understanding and audit understanding of those people. And it makes it very difficult for the auditor, of course, because they can't get to the board and tell the board what they might have found and make suggestions to the board for improvements.
Question from Kulibo. You can open your mic and ask your question. If anyone have any questions, you can open your mic and ask your question. Kulibo, you can open your mic and ask your question. There is another question there. One ask about how we can achievement the ESG goals through reporting in for non-for-profit organization.
That's a really good question, a very timely question. Our phase 2 of our accounting standards research program will start to look at performance of these organisations. So we've tried to, through the accounting setting process in this country, examine what we call outcomes reporting or performance reporting standards for about 15 years. And we haven't been successful, to be honest. So we've been unsuccessful at understanding or developing a way of incorporating performance data into the financial reports or annual reports of not-for-profits and charities. So we want to focus on that. We think it's a really important thing to focus on. But it's a big challenge, of course, because different organisations have different purposes, and comparability becomes an issue. Data becomes an issue because that costs an organisation a lot to collect the data and then to be able to analyse the data. But perhaps also critically, when you start to report on non-financial data in your annual report, the next step is, of course, to have that assured, to have it audited. And auditors both don't necessarily have the skills to be able to audit non-financial data, but of course that also attracts additional costs to charities and not-for-profits or not-for-profits. And so there's not only a question mark over, well, what should that reporting look like? There's also a big question mark over whether or not that can be assured effectively, and whether or not those organisations have the administrative funding and capacity to be able to manage that process.
Thank you. Another questions about how the COVID-19 effect on accounting and auditing on the non-for-profit organization in Australia.
It's a really good question. So COVID-19 has impacted different parts of Australia in different ways. As you all, I'm sure, are aware, realise Australia is quite a big nation, but the population is very much on the outside of Australia, so there's not much population inside. And that has meant that cities like Sydney and Melbourne and Brisbane in the east have had very difficult time with COVID. In Perth, where I am, we've been incredibly lucky with regard to COVID, and so there's been very minimal impact. The other thing that's been really important in Australia is the fact that we have a lot of mining, and iron ore prices and mining prices have been retained very high, which has meant that even though our internal economy has been impacted by COVID, externally we've been doing okay. So the government's been able to get money and then to be able to issue money to charities and not-for-profits to support people. So all up, I think in Australia, we've been very lucky. That is context for saying too that charities and not-for-profit organisations have been under a lot of pressure. They have been struggling to be able to respond to the impacts of COVID, and also to be able to manage to avoid COVID, if you like, in the context of what we might call semi-medical services that they provide. But government has provided funding to all employers in Australia up until relatively recently, in order that they can continue to employ their staff, notwithstanding that they might not be achieving an income. And that has been good for charities and not-for-profits alike. I guess the third thing that has come out of the COVID issue, aside from those elements that I identified during my presentation, is the fact that for charities and not-for-profit organisations, it's been realised that we need more data on this sector in order to make better policy decisions. So traditionally, we haven't collected very much data on the sector. We don't know much about it really. And so COVID has identified that we really need to collect more data in future, because the not-for-profit and charitable sector is a really important sector to providing services to people who are homeless, to people who are hungry. And of course, COVID means that there's risks associated with that as well.
Thank you. Another questions want to ask about the corporate governance in the non-profit organizations and the difference between the profit organizations in the continuous in the Australia.
Yeah, that's a really good question. So if I start with for-profit organisations in Australia, and I think in the United States and the UK, I'm not aware of other countries, but in Australia, regulating companies is a profitable activity for governments. Governments charge fees to those companies, and our company regulator, the Australian Securities and Investments Commission, make a profit, and they provide that profit to the government. And so that there's a number of things around that that are important to recognise. The first one is, because the Australian Securities and Investments Commission makes a profit, they have much more incentive to regulate more closely and to monitor what companies do. That means companies generally are much more financially literate, much more have much more capacity in that respect, but also that they are more closely monitored. Not-for-profits and charities, on the other hand, are a very expensive regulatory framework for governments. Not-for-profits and charities don't pay for their regulatory processes, so there's no money in it for government, but also because the directors of those organisations often come from non-accounting or non-business backgrounds, it means that there's a relatively unsophisticated approach to governance for those organisations, and that's reflected in the regulatory environment as well. So companies, I think, are much more effectively regulated and much more financially literate than not-for-profits and charities in this country.
Thank you very much. Khalid, you have any questions?
Yes. Thank you, Dr. Mohamed, for this presentation, and thank you, Professor Dave, for this presentation. And just I enjoy the last maybe slide for presentation. And I have just one question. Do you think auditor maybe could be face difficulty? Maybe you mentioned it already for this. You answer it, but just I enjoy later, because that I want to ask you maybe again. I am wondering about the auditor and the Big Four auditing. When the Big Four auditing maybe failure, sometimes failure, some situation, do you think maybe the auditor in non-profit organization face difficulty when do auditing or with Big Four in Australia, or no?
Yeah, absolutely, Khaled. So thank you for that. It's a very good question. Pardon me, a very good question. the thing is, in Australia, charities and not-for-profits, unless they're very, very large, can't afford Big Four audits. And so what you find is the vast bulk of charities and not-for-profit organisations, because they don't have strong administrative budgets, they don't have a lot of money, then their auditors often are much less qualified auditors than you might see in commerce, for instance, because commerce can pay the Big Four, they can pay the second-tier auditors, whereas charities often are sort of way down the line, if you like. So I think it's a really important observation you make in your question, Khaled, that charities and not-for-profits not only have limited financial acumen and financial literacy, not only do they have limited money to be able to pay for audit processes, but there might be, and I'm being very general, I hope I don't upset anyone in my country, but there might also be the fact that because they've lack those resources and that competence, that the auditors themselves are not the best auditors. And that then has an effect, of course, on the quality of audit that's undertaken and ultimately the governance of those organisations.
Okay, thank you.
Thank you.
Another question. Another question there. I want to ask about what are the performance measurements used in non-for-profit organizations in Australia?
That's a really good question, Mohamed, and I think it's a really hard one to answer, to be fair. At the end of the day, the reason financial reporting is so important is because these organisations lack funding and lack financial resources, and also because those financial resources come from government, so they're public funds, or they come from philanthropists who collect effectively public funds or apply public funds. And so the financial focus has been really, really the central focus of charities and not-for-profits. And in the last 10 years that we've had the Australian Charities and Not-for-Profits Commission, that's been central. In terms of performance, though, there are a lot of different ways to look at performance. And in fact, I'd be delighted if you think it's useful to come back and talk specifically about performance, because there's a whole lot of research that we've done that looks at this particular question. But there's key challenges in relation to performance reporting. Number one, what should we report? So every charity is different and has different purpose, what we call a mission. And number two, collecting data is not always easy either. So when we talk about financial reports, of course, we all talk about a financial year. It might end at different times for different countries or different industries. But at the end of the day, we're talking about a 12-month period. If you think about child protection, or you think about disability services, or you think about migrant services, so people that come into the country and we support them to get on their feet, then often the outcomes aren't achieved for sometimes 5 or 10 years. If you think about education, we put people through education, we might not see an outcome for that for 15 years or 20 years. And so the reporting period of 12 months that is not necessarily aligned with the outcomes that we're looking to report in relation to the performance of the organisation. So like I say, I'd love to come back and spend a lot more time talking about that because it's a really interesting topic. But I think they're the chief challenges to outcomes reporting or performance reporting in this country.
Yes, thank you. Kulibo, you can open your mic and ask your questions.
Hello, thank you very much, Professor David.
My pleasure.
Can you hear me?
Yep.
Yeah, thanks so much for your presentation. My question goes thus. I observed from what you said that because of the financial limitations of non-profit making companies in Australia, that they cannot actually get quality auditors or quality financial personnel to maybe prepare their financial statement. So my question now goes thus that whether is there any way, whether maybe in terms of the accounting bodies in Australia, whereby there can be trainings in terms of maybe ethical values or ethical sensitivities for all these accounting practitioners, whether they are Big Four practitioners or the ones that work with non-profit making organizations that could improve the quality of the financial reports that are actually prepared by a non-profit organization in Australia?
It's a really good question, and the short answer is yes. I think that is a possibility. One thing that's hard perhaps to observe from outside the country is the fact that charities and not-for-profits have never really been, it's very much been the last 10 or 15 years that people have focused so much attention from government and regulators on the sector. So if you like, it's a very immature sector in that regard, and audit to some degree is an immature process as well. The other thing to be aware of is that in the Australian context, unfortunately, audit quality has been questioned many times, with the Australian companies regulator taking what we call a cold review of audit, a sample of audits taken during the year. A cold review, for people's awareness, is a situation where an audit, all the audit evidence for a particular audit is reviewed after the opinion has been signed. And they found that quite a large percentage of opinions provided by auditors in the corporate world weren't supported by the evidence that they had gathered. In other words, they hadn't gathered sufficient appropriate audit evidence to be able to arrive at the opinion they arrived at. So Kulibo, it's a really important question. I think you're right that the Chartered Accountants Australia, CPA Australia should be working hard to improve that quality, but perhaps arguably too, there's a quality issue more broadly across the auditing industry, not just in relation to charities and not-for-profits. But as I said before, my view is that because charities and not-for-profits are so financially strapped, they simply don't have money, means that they can't have the most substantial audit undertaken, which means that inherently there's probably problems there.
Thank you very much for your reply.
Thank you, Kulibo.
Are there another questions? Anyone have any questions? You can open your mic and ask your question. Thank you very much, dear Professor David, for your contribution and your effort. It's really an excellent seminar and excellent presentation. Thank you very much. And it's all that remains for me to say. Thank you, everyone that's joined us. And I thank you very much for taking the time out to present to us today, dear Professor David. It's been really appreciated. Thank you very much.
Thank you for the opportunity. I very much appreciate it. Cheers.
And I hope to see you soon in Egypt, dear Prof.
Absolutely. I'm very much looking forward to that. Absolutely.
Thank you.
Thank you.